Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, December 13th, 2024. Ron Quaranta here with my amazing friends and co-hosts David Brill and Joshua Klayman. Before we begin, our usual disclaimers, there's a lot to cover. Obviously, please keep in mind that nothing discussed should be considered any type of advice, accounting, legal, investment, and that everything that David and Josh and I are talking about are obviously our own opinions and don't necessarily represent the opinions of our respective firms. So everyone who's joining us on LinkedIn Live and on X and on YouTube, I believe, if you've got questions or comments for David or Joshua, please put them in the chat. David, you're clearly waiting for the Learjet to come on, so let's go back for you. David, Josh, how are you?
I'm great. I just had an event last night in Miami, and now I'm flying back to New York. And remember to take a jacket because I've definitely flown back to New York without a jacket, and had an unpleasant surprise waiting for me when I got back.
It was 25 degrees when I woke up this morning, David. So dress appropriately. Josh, I know you've been super busy. How have you been?
I'm doing well. I'm recovering.
Well,
as I'm sure we all are.
Indeed.
Yeah.
As we approach the holiday season, there's still a lot to cover. I wanted to kick it off with some stuff that we had all prepped about, and additional news as well. David, if you don't mind, I'm going to kick off with some of the macro stuff. Josh, absolutely feel free to chime in. David, Bitcoin just can't hold 100K as a support, which troubles me because I'm resigning myself to losing the stake wager. But why can't we hold 100K as a support level for something like BTC at this point?
You know, it's interesting. I think there's some people who really bought in the 60 to 70 range, saw a 50% profit and want to take profits, which I think is perfectly reasonable. I also think a lot of retail is selling right now. And so I think they see a big number. Hey, I've made some money. I'm going to sell. But I think, the ETFs are still continuing to accumulate. Michael Saylor's still continuing to accumulate. I do expect to see a correction at some point, but I'm not necessarily concerned about us not holding 100K right now.
Okay. Do you see that spilling over to the alts as well, David? You and I have often talked about some of the altcoins. And I mean, let's take it back to even, let's look at Ether, for example. It approached the 4,000 mark. They just seem to have almost a psychological barrier. Is that a lot of that tied to liquidations that you're seeing? And are we tracking wallet activity from whales? What are your thoughts?
So I think with Ethereum, I think I'm really bullish on it for next year. I know we're not giving sort of financial advice, but I think it's underappreciated. It's still 25% below its all-time high. So I really think that, maybe from a value perspective, it might have the best risk-reward profile in 2025. So no, I'm not really concerned about it. I think that, there's more volume being picked up in the Ethereum ETFs, and I think we'll continue to see that momentum in 25.
Josh, there's Satoshi, there's MicroStrategy holding Bitcoin, and then there's Joshua Klayman holding, 6 or 7 digits worth of Bitcoin tokens. Josh, what do you think about where you're seeing prices going? And I know we often joke about it. We joke about the stake dinner wager, but it's gone up significantly since you and I have met. And I remember conversations about clients that you have. How do you see the market given your perch?
I mean, the market is busy. I think people are, notwithstanding that, as you've noted, we haven't consistently held 100. I think, there's been a meaningful move in that direction. And, I was looking at something, which is Bitwise's predictions for the year ahead, 10 predictions. Do you mind if I rattle them off?
Go for it.
Is that okay? Okay, so prediction 1, Bitcoin, Ethereum, and Solana will hit new all-time highs with Bitcoin trading above 200,000. Bitcoin, and I believe they have ETH projected at like 7,000 and Solana at like 750 or something. Then they say Bitcoin ETFs will attract more flows in 2025 than they did in 2024. Then the third prediction is Coinbase will surpass Charles Schwab as the most valuable brokerage in the world, and its stock will top $700 per share. Fourth is 2025 will be the year of the crypto IPO, with at least 5 crypto unicorns going public in the US. Number 5, tokens launched by AI agents will spearhead a meme coin mania even bigger than in 2024. Goodness gracious. Number 6, the number of countries holding Bitcoin will double. Number 7, Coinbase will enter the S&P 500 and MicroStrategy will enter the NASDAQ 100, adding crypto exposure to nearly every U.S. investor's portfolio. 8, and don't worry, I'll wrap this up quickly.
No, it's okay.
Department of Labor will relax its guidance against crypto in 401k plans, enabling billions of dollars to flow into crypto assets. 9, stablecoin assets will double to $400 billion as the U.S. passes long-awaited stablecoin legislation. 10, the value of tokenized real-world assets, RWAs, will surpass $50 billion as Wall Street's embrace of crypto intensifies. And then there's a bonus. It's this bonus. In 2029, Bitcoin will overtake the $18 trillion gold market and trade above $1 million per Bitcoin. That's in 2029. So what kind of a steak dinner will that be?
I am not doubling down, Josh, on any wager. Josh, I really appreciate that. Really good perspectives. And David, what Josh described from, shout out to the Bitwise team who does a lot of research on this. That follows on something, David, you and I saw earlier, I believe it was yesterday morning, BlackRock's investment research report. And again, not advocating one way or the other, but it is now a far cry from don't touch Bitcoin. It's now BlackRock saying portfolios should allocate 1 to 2%. David, do you imagine that number going up, and do you imagine that number evolving given people's different risk profiles? And again, the generational conversation. It's easier for a younger person to invest a significant portion in Bitcoin than it might be for someone approaching retirement. David, what did you make of the BlackRock report? You're on mute, buddy.
First of all, I love that they're talking their own book. Gotta appreciate that.
It's true.
Look, I think 1 to 2% is perfectly reasonable. Look, it all depends on people's risk profiles. I think younger people will want more exposure to it and more exposure to crypto. And maybe older people will want a little less, or just, a couple of percent. Like, I think that, BlackRock is a very thoughtful leader in the space. And I think that I'm sure they've thought about this carefully. But I think people are going to want more exposure to this, especially if the dollar continues to get debased. And, even if you have gains on stocks in dollars, if your Bitcoin gains are higher, and if ETH, for instance, if we have an ETH ETF, which has staking income attached to it, those are compelling opportunities to get yield and income. One other thing I'd say, Ron, is that I really think you'll see more Bitcoin like funds or products that are doing covered calls and taking advantage of the big premiums that they have in that. So I think that's another opportunity to get yield.
For our options friends, earning the premium on selling some of the calls. I'm sure there's going to be another side to that market. But the covered calls make sense, David. We have that conversation a lot. Josh, you also raised something in the Bitwise list. You mentioned the ETFs, and that's an astounding commentary, given the fact that I think prior to the election, David, Josh, correct me if I'm wrong, something like 40 to 50 billion dollars in AUM on spot Bitcoin ETFs. That number is now almost $112 billion. Which is astounding. 10% of all new ETF inflows, a little over 10%, were for spot Bitcoin. So, David, Josh, is this the institutions coming in? We read about pension funds recently starting to allocate for Bitcoin. How much further can that go, Josh or David, on the ETF front?
You want to weigh in?
Okay. I think tag on.
I think we have a long way to go, Ron, and I think we're going to see multiple kinds of products. Look, the wirehouses still haven't come on board. I expect them to come on board in 25. I expect some of the big banks to, apply for licenses to being able to trade, Bitcoin and maybe Ether for their customers' benefit. So I see a rapid acceleration, especially when the wirehouses finally come on board. And then the Department of Labor, allows, Bitcoin in retirement portfolios, and there's a whole another pool of capital and equity and liquidity to put into the market.
I would just tack on to that. That gave me a moment to just check out the report further by Bitwise. So I'm a big Bitwise cheerleader today, I guess, for purposes of this report. But just reading this, they say in response to the question, how is it possible? They say three reasons. One of them is what David mentioned about major wirehouses coming on, right? And because they said some of the biggest ones have yet to unleash their army of wealth managers. And so that's one of them. Another one is they say year one is typically the slowest year for ETFs. And they point to the historical analogy of the launch of the gold ETF, where everyone was excited when storming out of the gate. They had something like 2.6 billion in inflows that year. But then in subsequent years, it went to 5.5 billion in year two and continued upward. So if you put it in line with gold's example, Bitwise, that's part of the prediction. And then the third thing, it says investors are laddering up. 3% is the new 1%. So
fair point, Josh. Really good perspectives. David, Josh, I've got to go macro on some of this. And David, I know you and I look at certain indicators. The thing that really jumped out at me this week was the high yield spread. For those in the audience who may or may not know, the high yield spread is generally the difference in interest rate percentages between what we used to call junk bonds, David, they're now called high yield, and long dated treasuries. And when that number compresses, it's risk on. People are willing to take on risk. David, that's sub 200 basis points, sub 2% now. Are we fully risk on, and do we have bandwidth to go even further risk on in the spectrum, given the macro?
So one thing that's been really interesting in this stock market rally is volatility has stayed very low generally. And so I think there's a view that there aren't a lot of black swan events that can occur that's going to sort of change the market right now. I do think that when you start seeing like those yields compress for high yield, it's something I would keep an eye on. There should be a healthy premium for taking on that kind of risk. And so I'm a little skeptical, but it is good for the crypto world that risk is on, but it's definitely something to be mindful of. What do you think, Ron?
I agree with you. However, when I start to see the high yield spread at 200 basis points or less, it tells me some analysts in the high yield space and I'm sorry to everyone in the audience that I'm getting so wonkish with this, are potentially overly optimistic on some of their estimates for the high yield. And that just can be a little bit of a trap. And again, that's not judging the underlying economic activity or where it's going. But I agree with you. It is definitely something to watch. Josh, I just want to point out for the audience, if you've got questions for Josh or David or I, please put them in the chat. And one other thing, Josh Klayman, our dear friend and attorney, has dropped a link and reminded me that we need to talk about the unemployment report. Josh, you are now part of the macro conversation permanently. So Josh, you kicked it off. So do you want to talk about the unemployment data that came out this week?
I really want to hear you guys talk about it. I think the numbers were very big, right?
Yeah.
And surprising, although maybe not surprising given the revisions that we've been talking about.
It's never the data.
Saw that, guys. I was thinking of you, and I was like, I want to hear what they have to say.
It's never the data, Josh. You're absolutely right. It's always the revision. David, a really weird kind of macroeconomic, not even weird anymore, but we had CPI data come in on Wednesday. I believe that was sort of in line. You got to peel back the layers to look at some differences, which put a lock essentially on a December interest rate cut by the Fed of 25 basis points. And then unemployment numbers got revised. David, 90,000 on the October or November data, rather. What are your thoughts on the veracity of this data? How does it impact macro?
I would love in 2025 if some more money was put towards getting better data so that we're making judgments based on better, higher quality data. Yeah. Look, and regardless of party, I'm not surprised that these pre-election numbers that were reported were, favorable to the party in control. I think that's the best way I can put it. I think we all believe that inflation was higher. Yeah. I think we all suspected unemployment was higher, especially on the white collar side. And one thing that's interesting is what's going to happen in this upcoming year with Doge and with the potential loss of a number of government jobs and the lack of hiring for government jobs in 25. I'm making an assumption here, but I think we probably all agree that the government's going to slow the hiring considerably. and probably have some attrition. So I think these numbers are actually worse than are being reported. And I don't know what the catalyst is to improve that. I don't even know if lower rates is necessarily going to improve that, but we have to see. But I think the employment picture is a little murkier than even with the revisions.
David, good point. And for everyone in the audience, not Doge, the crypto token, the Department of Governmental Efficiency, which David and Josh, I'm just going to say this, politics aside, some of the rumors or claims out there are a little scary, like get rid of the FDIC and fold that into something else. And, you know, those are challenging. And the IRS, well, I would be okay with that, but that's a whole other conversation. You know, we'll continue to monitor the macro picture. David, Josh, obviously important. This is our penultimate episode for the year. Our last episode is next week. So obviously, Josh, we can't have an episode without talking about some of the things, both from the legislative and regulatory perspective. Josh, I wanted to ask your opinion. We had our legal working group meeting on Monday, I think, because I'm starting to blur all of the dates at this point. But Josh, I'm hearing some things that sound really interesting, like, oh, the Coinbase case will be dismissed. The Ripple case will be dismissed. You know, from a legal perspective, Josh, and maybe it's a regulatory conversation, but how likely are those things to go away?
So, as I always say, I'm not a litigator.
Yep.
And I would say, as we've kind of touched upon, I think David did a great job explaining it in a prior session or call, at least in my mind he did, saying that, you know, we have to remember that whoever is the next SEC chair, whom we expect to be Paul Atkins at this point, pending, you know, a surprise with respect to confirmation, that he'll be able to pick a head of enforcement, right? And that head of enforcement will, you know, have some ability to make changes to the extent that things are already before a court, I mean, or decided by a certain point. I mean, I don't want to wade in too far about what can and can't be done, but I would like to be optimistic and say the message has been sent that regulation by enforcement is not the way to go. And I don't know. I remain hopeful. Nevertheless, I would love to hear your thoughts, guys.
David, I you know, following on from Josh's point, one thing I want to raise with you, and you've raised this in the past, I'm going on trying to understand the regulator kick when we look at the current SEC chair. And David, you asked this within the WSBA group, and I know we've had some conversation at the holiday party about it. They're appointing enforcement heads that are still anti-crypto. Why do that when, you know, a new incoming administration will appoint potentially new heads and a new SEC chair? And is this some kind of something bad's going to happen between now and the end of the year?
So it's really interesting. I don't want to be a conspiracy theorist, but I do wonder if there'll be a couple of complaints that drop before the end of the year to settle some unfinished business, maybe with some outstanding Wells notices that have been put out. I will, you know, I'm going to take a sort of broader view in 25, and I'm going to predict that some of these appellate cases will be resolved and settled. I think they'll be settled for nominal fines. I don't think anybody will be accepting guilt. I think the question we have, I think especially with the exchange cases, is what's left? What if there's no regulations on the books? You know, if we don't think that these crypto exchanges or national securities exchanges or, you know, fit into one of these boxes, like what is the regulation for them? Yeah. And I think that's kind of a multi-dimensional question, because on one hand, Congress may see a market structure bill in 25 or 26. But in the meantime, you know, I do think that the exchanges need a little more boundaries around them. And so I think it's a challenge. So I don't think it's so much a pure legal issue as more of a structural and regulatory issue about, you know, how are these exchanges going to look within the regulatory framework. And the last thing I'll just say is, remember, our securities laws are basically from 70 plus or 80 plus years ago, almost 90. So they've been durable, and and the jurisprudence following them is, you know, has been very, I think, helpful in supporting a growing industry, but I don't think these kind of instruments are ever really contemplated.
David, Josh, really good points. And David, go ahead, Josh.
Oh, no, I was just, I don't want to cut you off, Ron, because it sounded like you had something related that you wanted to say.
No, go for it, and I'll lead us to the next point.
What I was going to say is just, I was with a group earlier this week on Monday. I'm not sure if I can say where. Well, but in any event, I was with a group, and one of the things that was observed was just this idea, in terms of crypto-related regulation and market structure and things like that. One comment was made that, to the extent that some of the decisions hold, for example, decisions about like the Ripple decision or others, that could be a lot more favorable than what some of the potential legislation that has been previously introduced would be. So it's really, when we think about the interplay of the enforcement and the litigation, with what we will expect to see, if, as many of our friends believe, we may not see digital asset related legislation until the second half of 2025, given the more immediate priorities like trade, tariffs, immigration, things like that. But I wonder, to the extent there are turns or twists, whether we may end up with legislation that would even be more industry favorable than, say, Fit 21 or something like that.
Yeah, fair point. And that brings me to the point I was getting to, Josh. When you look at the context of what you and David are talking about, there's certainly the litigation, the regulatory issues. It's also the legislative conversation around who's being appointed to what roles. And I think it was yesterday, Congressman French Hill was appointed to chair the House Financial Services Committee. And maybe he's not the most vocal, someone in the audience, correct me if I'm wrong, most vocal of crypto supporters. He's been noted as a crypto supporter. And House Financial Services is not a lightweight committee. A lot of decisions get made there. David, Josh, do you agree with that point? It really becomes who chairs these committees. Senate might be a bit more challenging from a Senate Banking Committee perspective, but this is good news.
Yeah, look, I think it's good news. I actually think the challenge for our industry is everybody coalescing around what rules they think should govern the industry. I think that we have different parties in different areas. You have the centralized exchanges, you have the decentralized exchanges. You have people who are more pro-privacy, people who aren't as concerned about privacy. So I think the real challenge in part is going to be, can we as an industry coalesce around what the rules should look like? And is that possible? I mean, I think we have to in order to get legislation passed. But I think that's going to be a real challenge for us in 2025.
Go ahead, Josh.
Yeah, this brings to mind what's been in the news about Caroline Crenshaw.
Yes, that was the next point. Yes.
Oh, okay. All right. Well, then right on time.
Go
and I part of what I've been reading, although I'm sure some are closer to the action than just reading about it, is I've been hearing about Sherrod Brown getting frustrated with what he refers to as special interest groups, which I assume means the crypto industry, given his unhappy relationship with the crypto industry. As for those who don't know, I think many credit our industry in Sherrod Brown's not being reelected. So, but yeah, there is a strong push not to vote yes for Caroline Crenshaw. What are you guys hearing or seeing? Or
I'll weigh in, Josh. We've had the conversation about Commissioner Crenshaw, who's clearly not a fan of crypto over the past couple of years. And while I understand the support the industry has brought forward to kind of influence how elections turn out and to go for preferred candidates, it feels to me, David, that we're very far away from crypto as a nonpartisan issue now. And how concerned should we be about that?
I had this conversation at our WSBA holiday party.
Yeah.
I will say this. I'm trying to say it in as nuanced a way as possible. But look, we have representative government, and people and groups should certainly advocate for what they think is right. Caroline Crenshaw, the court ruled in favor of having an ETF, and she still dissented against it and wanted to go against what the court ruled. And so that's just sort of not consistent with the jurisprudence, and it's not consistent with what's, was ruled in the best interests of individuals. And so I think Sherrod Brown, and I think some parts of the Democratic Party, I hope will wake up to the fact that this shouldn't be a partisan issue. And, it might just be a little bit of sour grapes, just trying to, shoehorn a candidate in at the end of his term. It's clearly not what the people wanted and not what was voted in. So I think it's disappointing to sort of do this in the lame duck session. But,
Yeah.
there have been some pardons that I think have been a little strange, too, that have gone on. So par for the course.
Indeed, David, really good point from the perspective of the lame duck. Shout out to Adam Goldberg and Dina Ellis. We do our policy updates, and I didn't get a chance to have this conversation with him on Wednesday evening. David, it was great to see you at the holiday party. It was great to see so many WSBA members. Josh, you were definitely missed. But, the idea of kind of inserting these kind of appointments, David, from the perspective of the lame duck, if I read the latest, that was pushed to the side. The current banking committee chair, Sherrod Brown, couldn't bring it to a vote. So it looks like there's a possibility that Commissioner Crenshaw is not renewed for a new term, which I think would end in 2029. Someone in the 2027. Someone in the audience, correct me if I'm wrong. We're running out of time. We've got a really short episode. So everyone in the audience, thank you so much for joining us. If you've got additional questions for Josh or David, info@WSBA.co. David, Josh, I'm going to throw one thing out there. It's a prediction, but it's not a wager, David. Please don't ask. But assuming Commissioner Atkins is confirmed for the SEC, is it likely that the first thing he might be able to do for crypto is rescind SAB 121?
That's the 64,000 Satoshi question. Huh? That's, I don't know what his priorities will be, but I'm sure it'll be high on the list. I don't know that it'll be his first priority. I think that sort of getting his, full cohort of commissioners and appointees in place, but I think it will be high on the list. And I think that's something that had bipartisan support. Ultimately, I think if President Biden had a redo on that one, I think he would have probably wished he hadn't vetoed that. I think that affected the view of the Democratic Party in the election in some ways, and that's something that did have bipartisan support, was still voted down, really left the view that the administration is anti-crypto.
Absolutely.
David, Josh, we're just about out of time. I know it's a super short episode. David's waiting for that Learjet, Josh, we were talking about. Let's talk about next week. Next week's episode will be the last of the year. It's been a great year with you all. Wait, before we do that, I'm sorry. I did mention the holiday party on Wednesday evening. Again, David, Sonia, it was great to see you as well. We could talk about manufacturing jobs at the next happy hour. Shout out to our friends at Eisner Amper who hosted us for our holiday party. What a great group of folks. We're privileged to have them as members. Josh, I know you're
I'm sorry I couldn't attend. Sorry.
You were missed, but there will be other gatherings. Josh, I feel like you're back to doing 100-hour plus weeks like when you started your law career. Is that true?
It's been very busy.
What are you looking forward to in the coming week besides hopefully slowing down a little bit?
Just enjoying the buzz of the, I don't know, well, the holiday spirit, but also, frankly, I'm happy things are busy. I'm happy so much positive momentum is there. And I don't know, I'm just happy. I love this time of year. I love reflecting back on everything. But next week, I cannot wear this giant black sweatshirt. I look like I'm in a swamp.
It looks like an elegant turtleneck from this perspective. David, Josh, I do want to do one more shout out if I could, and I should have mentioned it earlier. Shout out to our dear friend and our prior guest last week, the one, the only Emma Channing. It was great to have her join us, and she's on my side, David, with 125K. We've got about 16 or 17 days left. I don't know, but I have resigned myself. And for everyone in the audience, just keep in mind, David sends me links to these restaurant menus now, and the prices are terrifying. We'll leave it there. David, safe travels, buddy. Good to see you. Josh, as always, such a privilege. For everyone in the audience, again, if you've got additional questions, info@WSBA.co. We will see you all next week. Take care.
Take care, everybody.
Bye-bye.
Bye.